Good afternoon. This is Lance Bryce with Thrive Mortgage. Today is August 11th, Thursday. Hope you're doing well. This is your market update for the week. We are seeing interest rates higher this week, about 1/4 point from last week higher. The Mortgage News daily tracking has us at 5.27% for a 30-year fixed conforming. That's the national average, of course. 5.09% last Thursday. So again, up about 1/4 point. And frankly, you would look at what we got today in the way of economic news, and you would think that rates should be lower. Fixed income securities like bonds that control our interest rates really do not like an inflationary environment. And generally, when you see news come in that shows inflation is slowing, that would benefit bonds. And you would, if you'd asked 100 bond traders, rates should be lower today and bond prices higher based on a much better than expected consumer price index. Came in at 0% for July, so we saw no price increases in July versus 1.3% in June. The producer price index, which is a little more heavily weighted to the prices that businesses pay, we were expecting a 0.2% increase month over month, actually came in at a 0.5% decrease. So this is primarily owing to gas prices declining 17% month over month. So we're seeing a nice decrease in gas prices. That's responsible for about 80% of the decline in those two reports. In any event, I know all of us will take it. At the consumer level, we want to see prices come down. Gas is helping make that happen. Now, what is pushing rates higher, though, is that blockbuster employment report from last Friday. Even the administration's most ambitious view of that report had it coming in around 250,000 new jobs. We got twice that, a little more than twice that. So that report was much stronger than expected. The unemployment rate is coming down significantly. That is weighing more on the bond market, frankly, than this good inflationary news. The stock market is also liking it. The Dow's up 1.6% week over week, 530 plus points since this time last week. Not much to dislike if you're trading stocks with strong jobs numbers and inflation seeming to have hit its peak and starting to come down a little bit. In any event, that is pushing rates a little bit higher this week. You'll see rates in that range, 5.25%, 5%. High 4s, depends on the borrower. Call me for specifics. I'm happy to price any scenario that you might have. You can reach me as always, BryceHomeLoans.com has all of my contact info. You can call me directly on my cell, 210-260-9660. Honored to work your mortgage referrals and to help your clients with the best advice that we have available to us. In any event, talk to you next week. Stay blessed and stay safe.